You're listening to the We Love Equity Real Estate Show, a podcast that discusses the intricacies of real estate investing with your host, Marcus E. Maloney. Marcus is a real estate investor best known for being the equity king. He's been awarded that moniker because he and his team find amazing real estate deals. He will be talking with investors who have done some transformational things in the real estate industry. They'll discuss their process, their strategies, and how their investments transform their lives and the communities they invest in. We welcome you to the We Love Equity Real Estate Show.
I knew it was always the end goal, always. But in the multifamily apartments, the wholesaling was a means to an end for me. I mean, I still have wholesaling, a company that still runs, but ultimately it became a vehicle that produced active income in order to buy apartments that produced passive income. So I was always had that vision. And when I got into real estate, my biggest problem was I had zero capital. So I had to figure out how to make money. And doing that in wholesaling and fixing and flipping is great.
The We Love Equity Show is brought to you by ASREA, widely recognized as an outstanding resource for real estate investors with exceptional education, networking, and support, along with profit-enhancing benefits and all aspects of real estate investing. Visit ASREA at www.asrea.org. That's visit ASREA at www.azrea.org. Hello, what's up? We Love Equity Real Estate family. How are you guys doing today? Today, it's 2022. We're getting fresh, getting started. It's January. We really want to make sure you guys are getting out the gate very, very strong. And today I have a very special guest, Chad King. Chad King is really a great guy. We've been known in many circles together. This is our first time doing something together, but he's very, very big on acquisitions. He's very big on multifamily. So we're going to kind of go down a couple of different paths on today, but hold tight, grab onto your seatbelts. I'm pretty sure, and I know Chad is going to take off and we're going to take flight today. So Chad, how are you doing today?
I'm doing great, Marcus. I'm so happy we're finally getting together. As you mentioned, we've been in the same circles, like a bunch of them, and we just never got together to do this. So this is going to be awesome. And yeah, I agree. Just make sure you stop me, man, because I get so excited. I'm going to go down some tangents, and we're probably going to talk about some really good stuff between sales, acquisitions of single family, multifamily. I can't wait to get into the conversation.
Well, man, this is what we want. We really want you to provide value to the listeners. So wherever you go, believe me, I'll follow you, and we'll make sure we keep this train on the track. All right.
Cool. Sounds good.
So Chad, give us a little bit of background about you, man. Where are you from? What are you doing? How did you get started? So let's get the background out of the way. Chad King, who is Chad King? Introduce us to Chad King.
Sure. So I'm originally from Florida, grew up in Jacksonville, went to school at Tallahassee, Florida State, met my wife down in South Florida. And that's where I started working at Xerox out of college. I was selling copiers door to door. Did that for a few years, climbed the corporate ladder. I was the top salesman in the company my second year, and ultimately just didn't want to do that. The whole corporate ladder climb, the path was all laid out, the 401k match, the whole deal. And I got comfort was a little thing that was making me kind of want to change. So I ultimately just leaped into real estate after doing a little bit of homework and figuring out kind of which path I wanted to go. Leaped into real estate full time, started in the wholesale fix and flip space. Like probably many of your listeners got punched in the face for the first year of it, just trying to figure it out. I made a lot of mistakes in the beginning, not hiring a coach, not joining a mastermind. I was just trying to figure it out myself, reinvent the wheel. So I pounded my head against the wall for quite a while, and then ultimately started to get a little bit of traction. I think it was about 8 months before I did my first deal. So it was quite a while. Credit card bills were piling up, all that kind of stuff. And then did my first deal, then put all the money back into the marketing, did 2 more deals. And then the next month, just 4 deals, and then scaled up, ultimately partnered up a guy we both know, Bill Allen, who runs 7-figure flipping. Yeah. So I met Bill, brought his company to Nashville, Tennessee. My wife and I got married and wanted to relocate to a more conducive market. South Florida is kind of tough to get out of. It's like 8 hours just to get out of the state of Florida. So Nashville, Tennessee. And when we get into my story on a multifamily apartments, you might understand why we chose Nashville, but brought his wholesale fix and flip company to Nashville, scaled it to a few different markets, ultimately I think my biggest year, I did 168 transactions, which was 2019, 168 wholesale fix and flip transactions. And that was a big year. And then really started to transition into multifamily, which is where I'm at now, which is finding and acquiring apartment complexes. So,
all right. So let's kind of go back. So
yeah,
you were working at Xerox. Did you just quit and then said, I'm going into real estate, or was there like that transition period time?
No, I just quit.
Cold turkey and went
yeah.
for it.
I don't recommend that. Listen, some people should do it. I don't recommend it to everybody, but I was, in my early 20s. I kind of had not many liabilities on my plate.
Yep.
So it was a good time for me to do something like that. Like if you're young, take risks, take chances. I highly recommend that. Now, if you're a little bit older, you got a family to take care of, I wouldn't recommend cold turkey, but yeah, just leapt in. I honestly, I talked to a gentleman by the name of Grant Cardone, if you know him.
Yep.
He had told me if he had started in real estate at my age, he'd be a billionaire. And after he said that, I was like, what am I waiting for? 2 weeks later, 2 weeks later, I quit.
Let's go. So you quit, you got started. You said it took you 8 months to do that first deal. What were you doing? I mean, what were you doing because I know a lot of people go through that period where they say, okay, I learned about wholesaling, I learned about real estate investing, sat there and I soaked up all of this knowledge. What did you do to take action?
Yeah. So I got caught a little bit in the analysis paralysis phase in the beginning, getting stuck on YouTube University, which is a great place to learn, but it can be a paralysis area. So I spent a good amount of time there for the first couple months and then started driving for dollars. I actually started knocking on doors, which is, I don't recommend that at all because that's what I knew how to do. Started driving for dollars. Then my wife and I were putting out bandit signs. She would drive me around and put out bandit signs. So we were taking a lot of action at a very low level. Like we were not sending a ton of mail. I didn't have a lot of money. So I was doing a lot of the guerrilla marketing stuff that, like, driving for dollars and writing handwritten letters is very, very cheap. So ultimately that's what I was doing and spending a good amount of my time doing. And it just takes a while to get any traction. I had a couple deals that went under contract that fell through. Obviously, when you're first getting started, those hurt a lot more. I remember that first one that fell through is just like, and then for that 8 months, I mean, every day that thought just creeps into your head of like, let's go back to the corporate job. Like, it was just, how nice was it to get a paycheck? And you just ultimately got to push through that. But I spent a lot of time just doing the guerrilla stuff. And then ultimately my first deal came from a handwritten letter from driving for dollars.
All right. So tell us about this first deal. I know it was a ways back. Wait, how long ago was this, Chad?
Oh my gosh. This deal was in 2017, beginning of 2017.
Okay. 2017. So about 5 years ago. So tell us about that. And that's not that long ago. A lot of people look at it and say, well, you know what, I became a millionaire in 2, 3, 4 years. But a lot of times it takes time for you to get that momentum. So 5 years is not a long time to go from just starting to where you are now. How did that first deal transpire? I know you said you were driving for dollars. Kind of walk us through there on the surface level.
Yeah. So, I mean, I remember it at 2901 North 16th Street. It was down in South Florida. Just guy responded. It was rented out to a tenant. Guy wasn't taking care of it at all. Ended up making, I think we had it under contract for like 120, ended up selling it for 128 on a wholesale. And I had to split it 50-50 with a guy because I had no idea what I was doing. He brought the buyer.
Okay.
And I ended up making $4,000, which at the time, looking back, like 4,000 is nothing. But at the time, that $4,000 check hits and you're like, it works. Like we can do this. Like it works. I remember it like yesterday. It was the most exciting time, but little $4,000 wholesale deal. That was it. That was the first one.
And that's that proof of concept, man. It let people know that, hey, everything that I've been looking at on YouTube or I've been seeing on Instagram, Facebook and stuff like that I was possibly thinking was impossible. Now I know this validates it. This $4,000 validates everything that I've been doing for the past 8 months. So, I mean, good for you. Good for you.
Yeah. Like you can make money like without having to have the down payment or purchase the piece of real estate. I mean, that's kind of that was the thing that was a difficult concept to wrap your head around, is like, you can get started with no money. It's tougher, but you can do it. And it makes sense. And looking back, I mean, I spent, you mentioned like my acceleration in 5 years, and I think we'll get into it here, in a little bit, but it had a lot to do with then finally realizing that, hey, investing in coaches and mentors and everything like that helps accelerate growth like 10x. So that first 8 months, I could have done what I did in probably a month had I just hired a coach or, done something like that. So we'll probably talk about that, but I wanted to allude to it because
that's a good segue right there, because a lot of people, especially those getting started, they figure, well, why should I hire a coach? I barely got money for marketing, so why should I hire a coach? So kind of go into that. Why is hiring that coach so important, Chad?
Oh my gosh. I almost can't convey how important it is. I don't know, because it's not just about acceleration in the experience that you're paying for. And it's not only about helping do the deals, but helping avoid the potholes that a lot of these coaches, and the good ones, the good coaches and mentors have made in their careers. Like, they can help you avoid those potholes that you might walk right into had not having that coach there. So it's just about as much money as they can save you as it is as much as they can make you in accelerating your growth. And when I first got started, I was sending out like little bracelets thinking that people would respond. I was doing the dumbest stuff. And I'm like, I look back and I'm like, these guys that are in this 7-figure flipping, this mastermind who talk about flipping and wholesaling, if I had just been in that, they would have said, don't do that, do this. And I probably would have had a deal in month 2, but stubborn me. And I think it's a little bit of stubbornness that doesn't want to hire. I don't need a coach. Like, I'll figure it out. You're making a mistake, because coaches, I have 7 coaches now, like in all different aspects of my life, because that's how much I believe in coaching and mentorship. So.
Yeah. And it's very, like you said, it's invaluable. The money that you think that you're spending on a coach, you're going to get that 10 times over just from the education and the application, and doing these first handful of deals or doing the next deal, things like that. Because I remember when I got started, again, I was same way, YouTube University. I'm gonna figure it out. You know what? I'm an MBA. I got the mindset. I got the skills. I got the know-how. Let me just go out here and be creative and figure it out. And it took me 10 months, in order to get that first deal. But that first deal really didn't come until after I made a ton of mistakes, and somebody that knew how to do what I was doing said, hey, you know what? I see you hustling. I see you grinding. Let me show you how to do it. So it wasn't until I found that mentor, till it happened.
Yeah. And you mentioned something, it was very, very subtle, but I want to highlight it. You said most people think of coaching as spending money, and it's actually investing money. So if you guys really want to be investors, like, coaching and mentorship is one of the best investments you can make. And I would recommend making that investment before you even invest in a piece of real estate. You should make that one first.
True.
Yeah.
Very true. Very true. So you found this mentor, this coach. It accelerated your growth. What did he show you, or she showed you, or taught you that you otherwise didn't know that really helped you accelerate that growth?
Yeah, really, essentially, it was about marketing systems and processes. Because I had the sales, like, I coming out of Xerox, like, you put me in front of somebody, it was a done deal. I just wasn't sitting in front of anybody because I didn't know how to generate leads, right? So I wasn't I wasn't a systems and processes person. And I think that was my biggest takeaway from my first coach is, that was the thing that was like, oh man, it's a sales and marketing company. It's not just sales, because you can be the best in the world when you're in front of somebody, but if you're not in front of anybody, it doesn't do anything.
That's true.
Yeah, that was what I would say was my biggest takeaway from my first coach, is implementing marketing systems and processes into your business.
Good. And that's what I tell people. I tell people, hey, you know what? You got to be constantly marketing. I said, every time you talk to somebody, that's an opportunity for a transaction. You don't want to look at every conversation as transactional based, but you're always selling something. Someone's always selling you. It's on, hey, where are we going to go out to lunch? You may, hey, I want tacos. They may want pizza. Okay, who's going to win that sale? Where are we going to go? So, and then that marketing aspect is key, because like you said, you got to be able to get in front of people. You can have all of the sales skills, but if you can't get in front of people, those sales skills are useless.
Absolutely. And, to elaborate on your point there, like, sales and negotiations, I love that you touched on that. Like, we'll probably talk about that, because that's one of my strengths. And I do a little bit of sales coaching now, because negotiations and sales is so important. And a lot of people don't realize that they're in a negotiation, and therefore they don't train on sales and negotiations and how to have tactical empathy and how to actively listen and how to uncover, motivation and things like that. And if you don't understand that you're in a negotiation and the other person does, you're probably likely going to lose that negotiation. So it's really important to understand sales and basic sales skills too.
That's true. So true. So true. So how did you, so after you found this coach and you pivoted to, ramping up, doing more deals and everything like that, you spoke about a partnership with Bill. How did that transpire? How did that come about? And why did you even decide to partner?
Yeah, great question. So it was ultimately the mastermind that I alluded to earlier, that Bill now owns and runs. That's one of the mentorship groups that I had plugged into, and got involved with Bill, and he was looking to expand his company. And he had, what I noticed about him when I sat down with him in the first time we ever sat down here in Nashville, was he had the systems, the processes, the team, the operations, a lot of that all really, really dialed in and figured out. But where his company was lacking was a lot on the sales side. The salespeople were poor, closing ratios were poor, offers made to contracts were really low. Like, those numbers I noticed were really poor from what I was able to achieve. So I was like, man, there's an opportunity for me to plug in to his vehicle and then take everybody and accelerate very quickly. And, that may be a lesson to some listeners who think that you have to do it alone. Like, you can hop into somebody else's vehicle and go further and farther, faster together. You don't necessarily have to recreate your own wheel or do it alone. Partnerships are very important in this space. I mean, I would not have gotten to where I am here, even with my apartment portfolio, without guarantors, partners, sponsors, money raisers. Like, everybody has a role to play, and you don't have to recreate the wheel, especially in single family. There's a lot of people out there that have complementary skills. Somebody may be good at sales, somebody may be good at marketing. Well, why are you guys both trying to recreate the wheel? Just partner up.
Very true.
That's ultimately what happened. And then we just kind of, it was like rocket fuel. Once I came aboard and kind of took over the sales department, we just started going and going.
That's excellent. That's excellent. And that's what I tell people is, partner, strategically partner. Find somebody. If you're good at sales, they're good at marketing, partner up. Why try and go out there and learn a skill that you really don't have time to learn the skill in, and you're not going to be effective at it. Yeah, you may be able to do it at, 40%, 50%, but you want somebody that's going to, achieve at 90% or greater. So Chad, so once you got into that vehicle and you started looking at, the sales numbers and everything like that, for somebody that's in that position that's saying, you know what, hey, my sales team may be lacking, or I don't know where I'm missing it. We're doing all of the marketing, we're doing everything. What is like some of those conversion rates, contract to, appointment to contract, things like that? What are some of those ratios that somebody should look at? And I know we didn't talk about this, but since you mentioned, I said, hey, let's kind of go down that lane.
Let's do it. I kind of jotting a couple notes down because I don't want to miss anything. So it does depend if you're going, I would say, before I give you guys some numbers, I would say it depends if you're going belly to belly closing or if you're closing over the phone, because those close rates are drastically different. I'll kind of give you guys both of them. But for the most part, you got to be generating a lot of leads. It's a funnel. Everybody understands the funnel. If marketing goes out, leads come in the top of the funnel, it gets squeezed down. Leads go from appointments go to appointments conducted, appointments held, because that's important. Because there's a fall off sometimes when people aren't getting to appointments fast enough. So it's appointments set, appointments held, then it's offers made, and then contracts. So if we're working up, from my experience, a belly to belly close rate is typically for a qualified appointment about 25 to 30%.
Okay.
Better salesperson can get up to 35%, maybe a little bit higher. Your salespeople that are on the chopping block are probably around 15 or 20% for offer made to close. So a good salesperson should be closing 1 out of 3, 1 out of 4 offers that they make. And in my experience, if you're going on qualified appointments, you should be making offers on about 75 to 80% of your appointments, right? Perfect. 25% are just going to be these, retail takers just looking for $1 million for a 200,000 piece of property. Not all offers have to be made on the first appointment. You need to know when to withhold your offer, because your offer is your leverage. I tell salespeople a lot, some people are really trying to I see some sales leaders really pushing people to do like one call closes. And that's great. And you can close on one call. And in my experience, I do about 40 to 50% are one call closes.
Okay.
But there are strategic ways to withhold your offer to maintain your leverage, right? If there are a bunch of other people coming after me, like they have 6 other investors lined up for that day and I'm the first guy out, well, I'm not going to give up my entire leverage, because then they don't even need me anymore.
Exactly.
I'm going to leave a little bit of a range, or I'm going to withhold my offer and then try and swing back on the end. Hey, I'm going to be back this afternoon. Do you mind if I swing through when everybody's come through? And then build that relationship a little bit more. So I kind of went down a tangent, but that's offers made to contracts. And then over the phone, it's about 15%. It's going to be a little bit about half, just because you do lose that belly to belly connection that people feel, that a little bit of that trust. Honestly, it's easier to read people from an emotional intelligence standpoint, belly to belly. So you lose a little bit of that, which it factors into that ratio going down. So the caveat to that, the way to combat that is to drive more appointments and drive more leads. So if your salespeople are closing over the phone, technically they should have more time to talk to more people, because they're not driving out to properties. They're not walking, sitting on people's couches and driving back. So all that windshield time, your salespeople, if they're closing over the phone, can spend having conversations and hopefully increase their numbers to try and stay competitive with the amount of contracts they're bringing in.
Perfect. That's an excellent answer. And you gave some good numbers there. So guys, if you're looking to start building your team, or you already have your team, this is some of the numbers that you need to make sure that you're tracking your KPIs, your metrics. So you're following all of these numbers, so you can know, okay, who's a premier salesperson versus somebody that's kind of bringing up the rear.
100%. And also, going up the funnel too, tracking those KPIs in the marketing department, like how many leads am I getting, how many appointments are being set, and how many appointments are held. Like those numbers are really mission critical to get down to those contracts. So, if I have a salesperson that's talking to 50 people and they're making 2 offers, we got a problem, and I'm going to listen to their calls and dial in, what the problem actually is, right? It can always be tracked to one of those KPIs, which is why if you're not tracking them, you're honestly just throwing stuff against the wall and seeing what'll stick, because you can't measure what you don't track.
Very true. Very true. Wow, man, that's excellent. That's excellent. So what are some, and we're going to take a brief break here in a minute, but Chad, before we do that, this is the last question before our break. What are some of the things, as a sales coach, as a sales, been in sales for years, what are some of the things, just give me 3 skills that a good salesman should have?
Sure. My top 3, I'd have to say, number 1 is tactical empathy. The ability to put yourself in somebody else's shoes and see the situation from their perspective. It's a trait that takes a lot of training, a lot of my second tip, which is active listening, like really listening to somebody's problem, somebody's situation, and being able to ask great questions and identify, why are they in that situation, number 1, and how are they going to make the decision, because I need to understand what sort of trouble that they're in and the reason why I'm even in that house or looking at that house, and then what their ideal situation is next. Like if I don't understand those things, I'm not going to understand how they're even going to look at the offer, which means I don't even know how to properly present the offer.
True.
Tactical empathy is probably the biggest one, because you really have to be able to understand how somebody feels in a situation and put yourself in their shoes. And then, like I said, asking great questions, I think, would be number 2. And then number 3 is, or I said active listening is number 2. And then asking great questions is number 3. Being able to take somebody's words and make them elaborate on a statement. So if somebody says like, hey, this property, it's kind of a pain for me. Hey, Marcus, when you say pain, what do you mean? Tell me a little bit more. And if I wasn't active listening, I would have just asked the next question, right? But I'm listening and I hear pain and I take your words and I ask you another question. When you hear a question phrased in your words, you're going to be enticed to elaborate on it. And now you're going to tell me about the tenant problems that you have, all the stuff keeps going wrong in the house. And all I'm doing is drumming up emotion for you to make a decision, because people make decisions based on emotion and justify it with logic. And I'm also building up ammo for the close. So being able to ask great questions and get the prospect or person on the other end to elaborate is just, all you're doing is building your case to close the deal.
That's great. And that's one of the reasons why when people say, hey, yeah, my sales team, they got a script that they follow, I'm like, it's really not good, because they're really not connecting with that seller. They're not connecting on the other end, and they're not doing that active listening, because it's impossible for you to follow a script, because not everybody wants the same thing in the end. And not every problem is the same.
Let me tell you I gotta vent my beef with scripts, because I like scripts and they're a good guideline to follow as far as like a flow and basics questioning. But the problem when people read scripts or go off of scripts is they are waiting for the person to stop talking so that they can ask the next question, because a script ends up being an interrogation of questions because they're just trying to get through the script. And it just, it's not even they're not even having a conversation.
Yeah, it's no conversation.
And the person is so guarded on the other side, because 9 times out of 10, you can tell when someone's reading a script. And 9 times out of 10, they're not even listening to me, because the second I finished answering a question about all the that's going wrong about my house, they asked me how the HVAC was. Like, they clearly don't care.
Right,
and
right.
Be careful reading scripts, guys. It's they're great, but they're great tools, but they're not. You got to be able to have conversations with people.
That's excellent, Chad. So let's take a brief break. Let's hear a word from our sponsors. When we come back, we're going to talk about what you're currently doing in the multifamily space and everything like that. So let's take a brief break, and we'll be right back with Chad King.
Finding real estate deals can be a challenge, but with Batch Leads, it doesn't have to be. Batch Leads has created a one-stop solution for all your real estate needs, so you can find more sellers, close more deals, and maximize revenue. Batch Leads offers a comprehensive suite of lead generating tools that cover text messaging, skip tracing, finding comps, and much more. Batch Leads help you simplify, manage, and organize all your data in one place. Batch will help you stack your lists and identify properties that appear on multiple lists and have multiple distress indicators. These sellers are likely to be highly motivated and eager to sell. Get the most powerful and complete lead generation platform in the industry. Locate sellers, buyers, and lenders nationwide in seconds. Go to batchlead.io and use promo code WeLoveEquity.
All right, guys, we are back with Chad King. Chad hails out of Nashville, originally from Florida. So, Chad, we've been talking about acquisitions. We've been talking about wholesaling. You have pivoted completely into multifamily. How did that happen? I mean, how was that transition?
Yeah, I've been studying this game for a while. When I was at Xerox copiers, like, I was studying the apartment space. I knew I knew it was always the end goal, always. But in the multifamily apartments, you have to have, the wholesaling and was a means to an end for me. I mean, I still have wholesaling, a company that still runs, but ultimately it became a vehicle that produced active income in order to buy apartments that produced passive income. So I was always had that vision. And when I got into real estate, my biggest problem was I had zero capital. So I had to figure out how to make money, and doing that in wholesaling and fixing and flipping is great. It can be a phenomenal way to make money, but I don't want to kid your listeners. Like, it is not passive by any means unless you can build a business that you can then pass off to a COO or somebody to run. It's a very, very active, high paying job. And ultimately doing all those transactions that we talked about led to, a lot of active income, but you have to go back out and do it every time, because the transaction closes, you got to go back out. You do 10 deals in a month. The month is over, you got to do 10 the next month, right? So the transition came after a big year in the single family space, realizing that, hey, I have to pivot personally. Like, I need to pivot. I'm working 80 hours a week, closing all these deals, and it's awesome. But ultimately, what's the vision, right? And the vision is financial freedom, like passive income, retirement, like those things, being able to do what you want, when you want, with who you want, for however long you want. If you're going to have that vision, you have to start pushing into the rental space and getting into owning, whether it's a portfolio of single family homes or a building with 100 doors underneath it. So I, really made that transition in 2019 after a few years of wholesaling. Bought my first apartment complex that year. And then in 2020, bought 6 apartment complexes, bought 2 more in 2021. Slowed down a little bit.
Slow down, Chad. Slow down, because you're just glossing over. Hey, I bought 1 apartment complex. Then the next year I bought 3, and then I bought 6.
Sorry.
That's great. That's great. How did you do that first one? How did you say, okay, you know what? I got this sales technique. I'm normally doing single family. I'm going to move to multifamily. How did that? Let me ask this. Was your marketing then geared towards multifamily, or were you marketing for single family, and then this multifamily opportunity arise and you said, you know what? I'm just going to take it. We're just going to go for it.
No, it was the former. It was the first one. So we started gearing marketing towards apartment owners. So the first deal was a little 14-unit apartment complex, still own it today. And I mean, I absolutely love that property. We've refinanced it twice. And that was the first one. We bought it. I think I have the numbers because I had a feeling you were going to ask about the first one. So it was 784,000. We got a hard money loan to close it. Cause I mean, I don't recommend getting a hard money loan, but it was the way we could buy it with as little capital out of pocket as possible.
Yep.
So 784,000 is what we paid for it. It appraised for 950. So we add some instant equity.
Yep.
Immediately refinanced to an 80% LTV, pulled some capital out, like got all our cash back from the closing. We rehabbed it, we repositioned it, we raised the rents. Rents were at like 675. We're renting units out for 950 now, but we rented them out for 95 almost immediately with very little rehab. And then we got another appraisal 12 months later. It appraised for 122. So we got a 75% from that appraisal, pulled out 160,000 of tax-free money because loan proceeds, so it's a non-taxable event. And I have zero money in that deal, and it spits off net probably like $4,000 a month net of everything.
Wow.
And that was my first deal. And then after you do one, it's that law of the first deal. You said it earlier. Like once you do one, you're like, I can do this. So then the next deal was a 21 unit, and then we bought a 49 unit, and then a 65 unit, and then a 93 unit. And ultimately what we had to do was after the 14 and the 21, the deal sizes started getting bigger. So then I started getting into syndications. So we did 506B, and we've completed 6 506B and 506C syndications to this point, where you raise capital from other people. And I know you're big on capital raising and getting it to work for you. You have a vast network of capital raisers, and you're constantly growing it. So for those people, like getting involved in syndications with people that you know and trust and good operators and deals, that was ultimately what allowed us to buy some of these bigger properties, these $5, $6, $10 million properties.
Okay. So on your capital raise,
I keep skipping forward so fast.
No, don't worry about it. That's my job, man. I always go back and say, yep, let's dig into it. All right. So you did these deals. All right. So you got the first one, repositioned it, refinanced it, because I want everybody to see how you did this. So you found a deal, got the hard money loan in order to secure the deal. How much did you have to put up on that hard money loan, if you remember?
Yeah, we put $68,000 down.
Okay. So 68 grand down. So you got 68 grand into this deal.
Mm-hmm.
You refinanced it. Well, what did you do first? Once you secured it, stabilized rents, or you went in and did a little bit of the rehab?
We went in and actually we refinanced because we found a bank that would give us a refi with no seasoning period. So we actually had to close it pretty quickly. It was direct to seller, and that's why we got such a discount. The guy was in a pinch and needed his money. So, I mean, I love finding discounts.
Yeah.
I love buying deals at 70, 80% on the dollar. So that was the big driver here. And I knew we had a good deal. So I had to close it quick, and then found a bank that would refi at 80% based on an appraisal. So 2 weeks after we closed, we just refied, pulled all our capital back out.
Okay.
And then what we did was we renovated the units with the cash flow. So we didn't put any more money into the building. For the first year, all the excess cash flow went back into the units to renovate them and reposition. And then what we did, Marcus, was because the rents were at $695 or $675, and we got them up closer to $800, we did what's called forced appreciation, which I'm sure your listeners have heard of that concept. And that's what I love about apartments, is the value of the building is not based on the surrounding homes like single family, but it's based on how much income it produces. So because we raised the income, was able to cut a little bit on the expenses, our building that appraised for $950 a year ago was now worth $1.22. So we are able to now refinance based on that valuation. So it was the refi, then the year worth of repositioning, then another refi, and now we're just kind of holding, and it's an infinite return because we have no capital.
So now, was that in your base market? Was that in the Nashville market or somewhere in Florida?
Right outside of Nashville, here in Clarksville, Tennessee. It's like 45 minutes north of Nashville, a little military town.
Okay. All right. Great. Yeah. So you were able to find that deal. So your marketing to those deals, was it direct mail to multifamily owners, or how was that done?
Yeah, that one came from direct mail to a multifamily property. We do letters to multifamily owners.
All right, perfect. So you did that. Now you understand the landscape of how to do this. Then you started moving up. When you started moving up, naturally you need more money. So how did the capital raising and everything like that start?
Yeah, great question. So after that, like you have a little proof of concept now. So my next deal, the 21 unit, Bill Allen and I actually went 50-50, and I needed him to guarantor the loan too, because
Okay.
that building was over $1 million. At that time, I didn't have the balance sheet to be the sole guarantor. So he trusted me. He knew me, he trusted me,
Yep.
and he was willing to sign on the debt and also put up 50%. I put up the other 50. So we were able to do that deal with a partnership, just like we were talking about earlier.
Mm-hmm.
And then that next deal we bought, I think, was the 49 unit next, which is, it was $2.5 million purchase price. So it was $900,000 down. And that's the first syndication we did, where we raised $886,000, I think was the total raised on that, on a 506B syndication.
Wow.
So you go out to your network and you raise capital. Bill is a phenomenal capital raiser. So I'm really great at finding and negotiating the deals. And I don't want to mislead your audience. Like, Bill is phenomenal at money raising, capital raising. He has a vast network. So the cool part about these apartments too, is there's enough equity to slice up for different roles in the deal. So if for instance, on that 49 unit, we have 40% of the equity is for the GP or the general partners. Yep. And then the LP is the investors, right? So they get 60% for their investment of the equity. And then that 40% is for us. And that 40%, if you find the deal and you control the deal, that's why finding the deal is the golden goose, because you control it. Now you can control how that 40% is split up. So if I need someone to come and raise the capital, I give 10% of that 40, right, to somebody to come bring the capital in. And I assist with raising capital. I have capital in my network as well. But ultimately, like, you can do more deals if you bring on some capital raisers that their only focus, Marcus, is raising capital, while mine is finding deals. So I'm going out and finding the next property while he's busy having conversations with investors about their 401ks, their IRAs, self-directing, all that stuff in order to scale. And it's the same thing we talked about in wholesaling, where somebody's good at sales, somebody's good at marketing. Like, partner up. If somebody's great at capital raising and you are great at underwriting and you're great at underwriting deals, lean in and partner up with someone who's great at capital raising. And same thing applies in multi that it does in single. So that was ultimately the next one. And then just scaled it up from there with raising capital.
Okay. So again, the power of partnerships, power of leveraging your network, but at the same time, you're providing a benefit and a value to your network. So that's excellent. That's excellent right there, Chad. So, and I didn't know that backstory. So it's not like I was just asking these questions, being facetious. No, I was, how did it all happen? How did it all start? Okay. So what's next for you guys? What's next for you, Chad?
Oh, that's a great question. So we now teach people how to buy apartment complexes. So I bought into 7-figure. I actually own a little piece of that mastermind group. Okay. And the piece that I own is 7-figure multifamily. All the mastermind, they have a runway program, an altitude program. And this isn't a plug. I'm just telling my story. Fine. So there's a segue there where people who want to get started like I did can get in at runway and then ultimately scale up and get into altitude. And then if you are interested in the apartment side, we have a branch called 7-figure multifamily, which is where we teach people how to buy apartment complexes like we're doing right now. And I think the cool thing is, like, I'm still in the weeds. Like, I submitted an offer this morning. Like, I'm still in the mix doing deals with the people that are in the group. So it's really cool. So we're growing and scaling that and ultimately buying more apartments. I have a little girl that's about to be 1 and another baby on the way. So I'm in full on like grind mode, trying to buy more complexes because I know kind of what expenses are coming.
Right. You got some weddings you got to prepare for.
Oh God, yeah. I'm not even thinking about the weddings. I mean, I'm thinking about the diapers, daycare. I mean, but ultimately, so I'm just buying a lot of apartment complexes right now, and I'm being very selective with the deals, the markets. If I pay attention to a lot of financial markets. Things are a little volatile right now. I think they're propped up on a whole lot of nothing. I mean, we can go down that rabbit hole, but I'm being very selective with my purchases. I just walked away from an apartment complex that we had under contract. That's what I'm doing, is a lot of just buying apartments and then helping others do the same thing right now.
So for those who don't know, why didn't you pull the trigger on that other apartment complex?
Yeah. So, well, first of all,
if you don't mind sharing.
Yeah, no, of course. When you get into these apartment complexes, single family is it's kind of the Wild West. Like, it's like, hey, no inspection, 5K deposit, no inspections, like, and you just kind of what you buy is what you get. But when you get into these bigger complexes, you do due diligence, and you have to really dig into a lease audit and uncovering the financials and looking at the trailing 12-month operating statement and making sure the bank statements match the rent roll. So ultimately on this deal, to be honest with you, the rent roll looked really good on paper, but when we audited the bank statements, we found out the effective rent was a lot lower than what was actually being told. And which makes the effective rent is basically like you could charge $900 in rent, Marcus, but if you pay all the utilities, your effective rent may only be like $750. But you don't know that because if the rent roll says $900, so we went under contract based on some figures that were shown to us, and through a lease audit and checking the bank statements, we found out that a lot of people were paying really effectively a lot less. So ultimately, that's what killed that deal. We had to retrade on the price, and it was just, it didn't look as good. Once you peel back the curtain during due diligence, and I mean, I have a 2-page document of the due diligence items that I need when I put a building under contract. And it takes me 30 to 45 days to get all through my due diligence the correct way.
Gotcha.
Which is, that's ultimately what killed that deal, but I've killed others for other reasons too.
And that's good, looking at that 12 and 12 and looking at, doing the lease audits and everything like that, because some people, they just don't do it. Like I'm dealing with right now, just from experience, it's a smaller multifamily, and the landlord is just don't want to provide any of that information. So naturally, okay, it's a red flag. What are you hiding? What do we need to uncover?
Sure.
So we're under contract and we're requesting these documents, and they're slow trying to get these documents over to us. And I'm like, well, our attorney is on top of it. If we need to extend this inspection period, then we will do that unless we see something that's really not warranted, and we can always back out of the deal. So guys, remember, it's very important. If you got questions, ask them. Don't assume just because they say that the rent or the lease say the rent is 900, that's what they're collecting is 900.
Yeah. And it's a great point. And you have to be careful, because anybody can put anything on an Excel sheet, especially when you're buying direct from seller. Like I bought that 49 unit apartment complex, like the rent roll that he gave us was on a napkin. Like he had no expenses. He was just mowing the grass, collecting the cash. It was that kind of landlord, which is perfect. It was a mom and pop owner. That's perfect for a reposition on an apartment complex. It's exactly the avatar, what you're looking for. But your purchase price needs to reflect the risk factor that you're taking by buying something without any financials. You have to factor that in and be cognizant of that. And that's why, learning to underwriting and looking at thousands of deals, I have a good idea of what typical expenses are for, insurance, typical expenses for utilities, and typical repairs and maintenance and contract services. And again, that's the power of like a mastermind group, knowing what those expenses are. So you can buy a property that typically doesn't have a full profit and loss statement, because some of them won't. But be really careful buying something like buying a bad deal. What I say to my group all the time is it's better to buy no deal than a bad deal. And sometimes the best deal you ever did was the one you didn't do.
That you didn't do. Absolutely.
And it's so true in apartments, because these things are like marriages. They're not like flipping a house where you can kind of get out and take your lick. Like these are 5 to 7 year holds. So you buy a bad deal, it can put you really behind the 8 ball out of the gate, especially getting started. So you just be careful, do your homework, know what you're buying.
There you go.
I can't reiterate that enough.
There you go. So, all right, Chad, great content, great information, man. Let's put Chad on a hot seat. We're going to put Chad on a hot seat real quick, really quick. Yeah. Starting over, Chad, what would you do differently?
Hire a coach.
There you go. Okay. What is the greatest commodity outside of capital?
Greatest commodity outside of capital.
What do you think is your greatest asset outside of money? I think I got a good answer for you.
I would say emotional intelligence.
Okay. Emotional intelligence. I thought you was going to go with partnerships. Your partnerships.
I have some phenomenal partnerships. That's great too. It's a good question. It's hard. That's a tough question.
And what drives your ambition? Diapers.
Diapers. Freedom.
Okay. All right. Freedom. Gotcha. Okay. What do you believe is your greatest challenge? If it's either internal, something, mindset, or is it external?
It's internal. It's courage.
Okay. And you know what? And when I ask this question, the 9 times out of 10, it's always internal. It's
Mhm.
always, hey, you know what, I need to be, get over this fear of pivoting to the next thing, or I need to start, stop with these self-limiting beliefs. So that's very good. I mean, you're spot on. So guys, you listening, it's not external forces. A lot of times it's internal, what you believe, what you think, things like that. And then lastly, man, you were talking about your mastermind. For those who want to get into, multifamily, and they're looking for a good coach, looking for someone that they can lean on, kind of share with us about, 7-figure multifamily.
Yeah. If anybody wants more information, it's 7figuremultifamily.com. And then we have an event that we're throwing here in June. So I don't know when this is going to get dropped, but in June 2nd and 3rd here in Nashville, Tennessee, we're doing a live event, which if anybody's interested, I think tickets are a couple $100 right now. You definitely should show up. It's myself, my partner's throwing it. That is at multifamilyliveevent.com. And that's to get more information on the event. And I'm sure Marcus will put those links in the show notes so you guys can check it out. But yeah, come check us out and come to the event and take all the information. I mean, we're open books, we peel back the curtain. So get all the information you can. And then, if you want to continue with us and get into our mastermind, we have a great group of individuals that are doing big things. I would say right now, Marcus, I get more joy out of watching somebody close a deal than if I closed it myself. I get more joy out of watching one of our students that takes the information that we gave and closes a deal. We had somebody that just closed a 20-unit apartment complex, and it's life-changing. They got a ton of kids, and you get so happy for other people when they succeed. I ran in and told my wife, and you would have thought we had just closed a big one because it was, so I don't know. I was just sharing a story, but yeah, that's our group. Check us out and come to the event if you're interested in learning more.
Well, I'll make sure I have all of those links in the show notes. That way you guys, if you want more information, you can reach out to Chad. You can reach out to the 7-figure family and get that information. I always like to bring quality guests on the show. I never want to put anyone before you that I haven't vetted, haven't, done a deal with or had some kind of relationship with. And again, this is no different with Chad. Again, we've been in the same circle for a while, and this is just our first time getting together. So Chad, I really appreciate it, man. Thank you, sir. Thank you for all of the work that you guys are doing.
Thank you very much for having me. It was an awesome conversation. We shouldn't wait 4 years to do it again. I think it's been 4 years that I've seen you and been in your circle. We gotta get to it again soon.
You're absolutely right. So you got a social media profile, handles, anything like that for people to reach out to you?
Yeah, I'm Chad King on Facebook and at Mr. Chad King on Instagram, Mr. Chad King on Instagram. Getting more onto social media. Not a huge fan of it, but I'm trying to get better and better on it. So I'm posting more stuff. Come find me and follow me.
All right, guys, that is Mr. Chad King. Chad, again, thank you. I really appreciate it. Family, you guys know what to do. You got the information. You got the access. Get out there, take action, because there's no excuses, in order for you to be successful. Just get out there, take massive action, and you will reach your goals. Thank you again, and we will share with you next week. Thank you for listening to today's show. I picked up some great actionable items, and I'm sure you did as well. If so, let me know. You can always reach me via social media at facebook.com/MRCSMaloney, Twitter at MRCSMaloney, and of course, IG at MRCSMaloney. You can also always reach me via email at mmaloney@equityri.com. Make sure you reach out to our guests as well. You can always find their contact information in the show notes below. If you have not subscribed already, what are you waiting for? Join the family. And while you're at it, leave us a 5-star review. This is how we tell if we're providing you with what you need for your journey. If there's someone you would like for me to interview, or if there's a subject matter you would like for me to cover, please let me know. Finally, if you're looking for additional information about real estate investing, go to equityrealestateblog.com. Also, youtube.com/Marcus Maloney. Until next time, family, always enjoy the journey.